You checked the news this morning and saw that AI companies lost $1 trillion in a single week. $1 trillion with a T. More money than most countries have. Ever wonder if the tech giants who spent the most actually spent too much? Today, I'll explain what actually happened to AI stocks like you're 5 years old. By the end, you'll understand why incredible technology and profitable business are two completely different things. Here's what happened with AI spending and why it matters. Companies like Nvidia, Microsoft, Google, and Meta went absolutely nuclear on AI. We're talking hundreds of billions building data centers the size of football fields. They bought computer chips by the truckload and paid AI researchers salaries that would make your jaw hit the floor. The bet was simple. AI is the future. We need to go all in right now, and whoever spends the most wins. For a while, Wall Street loved it. Stock prices shot up like a rocket. Nvidia became one of the most valuable companies on Earth. Everyone wanted a piece of the action. And then a company in China called DeepSeek showed up and ruined the party. DeepSeek released an AI model that's shockingly good. Like, competitive with the fancy, expensive American version's good. But here's the kicker. They claim they built it for a fraction of the cost. Instead of spending billions on the newest, fastest chips, they used older, cheaper ones. Instead of building enormous data centers, they figured out clever shortcut. And suddenly, investors looked at all those American tech giants burning through cash and asked a very uncomfortable question. Wait, did they actually need to spend all that? Imagine you decided to open a lemonade stand with a massive budget. But instead of buying some lemons and a folding table, you spent $100 grand on a commercial juicer and a refrigerated truck. Your lemonade is fantastic, the best in town. But you're selling it for just $1 a cup and need to sell about 1 million cups just to break even. That's the AI situation right now. The technology works and it's genuinely incredible. But the companies building it spent so much that they're stuck wondering how they'll make it back. DeepSeek walked up with a regular pitcher and made lemonade that tastes almost as good. And everyone who bought stock in your fancy lemonade empire started sweating. Here's the thing though. This isn't about whether AI is real or useful, because it absolutely is. It's writing emails, generating images, helping doctors diagnose diseases, writing code faster than ever. This isn't some crypto scam where the technology never actually did anything. AI is already changing how we work. The crash wasn't because AI is fake. It was because investors realized the math might not math. When you're Nvidia selling chips for $30,000 each, and then someone builds comparable AI with $3,000 chips, that's a problem. Your customers might start asking why they're paying 10 times more. And the stock price that assumed you'd print money forever? Yeah, that's coming back down to earth. But wait, most of these AI companies aren't actually making money yet. Not real profit. Microsoft is spending billions on AI and giving it away practically for free, hoping you'll eventually pay more later. Google is doing the same thing. Meta is burning cash on AI because Zuckerberg decided it's the future and he's not taking questions. They're all convinced that whoever wins the AI race will dominate the next decade. But winning the race doesn't mean anything if there's no prize at the finish line. This matters to you because we've seen this exact movie before. In the late 90s, everyone lost their minds over the internet. Investors threw money at any company with a website. If you had .com in your name, your stock went to the moon. And then, in 2000, reality showed up. Most of those companies went bankrupt. Billions of dollars evaporated. But here's the twist. The internet itself was fine. Better than fine. It changed everything. The bubble bursting didn't mean the technology was bad. It just meant we got way ahead of ourselves on who would make money from it. Amazon survived. Google was just getting started. But Pets.com? Gone. The technology was revolutionary. Most of the companies betting on it still failed. So is AI in a bubble? Kind of. The technology is real, and it's here to stay. But the assumption that every company spending billions will become a trillion-dollar empire? That's the bubble. The idea that you can light money on fire building data centers and somehow it'll all work out? That's the bubble. The stock prices that went up 500% in 2 years? Definitely a bubble. DeepSeek didn't pop the bubble by proving AI doesn't work. They popped it by proving you might not need to spend a fortune to make it work. Now here's what Wall Street is actually worried about. It's not just the cost of building AI, it's what happens next. Let's say you're Microsoft and you spent $50 billion building AI infrastructure. Cool. Now what? How do you make $50 billion back? You can't just charge people $100 a month. The math doesn't work. You need businesses to pay thousands, millions. You need AI to become so essential that everyone has to pay you forever. But if DeepSeek or some other scrappy competitor can offer something almost as good for way cheaper, your customers might just shrug and leave. You're stuck with all that expensive infrastructure, like someone who bought a house at the peak. You're not broke, but you're definitely not as rich as you thought you were 5 minutes ago. And here's the uncomfortable truth nobody wants to say out loud. AI might be too good at what it does. If AI gets so powerful that it can do most knowledge work for basically free, then who's paying for it? If every company has access to cheap, incredible AI, then it's not a competitive advantage anymore. It's just the cost of doing business, like having email or a website. You need it, but nobody's getting rich selling it. It becomes a race to the bottom, where everyone's using AI, but nobody's making serious money except the handful of companies that own the core technology. That's great for consumers. Terrible for investors who thought they were buying the next Apple. Think of it like smartphones. When the iPhone first came out, Apple made insane profits because nobody else could build anything close. But then Samsung figured it out. Then everyone figured it out. Now you can buy a phone that does 90% of what an iPhone does for $200. Apple still makes money, sure, but the gold rush is over. The margins shrink, the competition increases, and suddenly that thing that seemed like it would print money forever becomes just another product in a crowded market. That's the nightmare scenario for AI companies. They spend hundreds of billions building the infrastructure. Then someone figures out how to do it cheaper. And before you know it, AI is a commodity. Useful? Absolutely. Wildly profitable? Maybe not. Let's be clear about something. The trillion-dollar crash sounds apocalyptic, but it's not the end of the world. These companies are still worth trillions, plural. Nvidia didn't go bankrupt. Microsoft isn't shutting down. They just came back to reality after spending 2 years in Fantasyland. Stock prices went up way too fast based on hype and FOMO. Now they're correcting. This is what markets do. They overreact in both directions. They get too excited, then too scared, then eventually settle somewhere in the middle. The companies that have real businesses, actual revenue, actual customers, actual products people pay for, they'll be fine. The ones that were just vibes and promises, yeah, those might be in trouble. So what does this mean for you? If you were thinking about dumping your life savings into AI stocks because everyone said it's a sure thing, maybe pump the brakes. If you work in tech and you're wondering whether your job is safe, the answer is complicated, but probably yes for now. If you're just a regular person trying to figure out whether AI is going to take over the world or fizzle out, the answer is neither. AI is here. It's useful. It's getting better. But it's not magic. And the companies building it aren't guaranteed to make infinite money just because the technology is cool. The crash was a reminder that hype and reality are different things. Great technology doesn't always equal great investment. To recap, AI companies lost $1 trillion in a week, but the technology itself is fine. They spent hundreds of billions building infrastructure, and then DeepSeek proved you might not need to spend that much. The crash happened because investors realized profitable business and incredible technology aren't the same thing. We've seen this before with the dot-com bubble, where the internet was real, but most companies still failed. And the uncomfortable question everyone's avoiding is whether AI becomes so cheap and common that nobody makes serious money from it. So here's what I want to know. If you had to bet $1,000 right now, would you put it on the tech giants who spent the most and have the deepest pockets, or the scrappy newcomers who figured out how to do it cheaper? Drop your answer in the comments, because in 5 years, we'll know who was right.